I want to start on your headline inflation number versus your core inflation number that just came out in March. The year-over-year slowed a good amount from 8.6% year-over-year to 7.6%. Still way too high. We know that. But your core rate is still climbing. What does that mean for your next meeting?
Well, the other thing to look at is month on month. Because when you do year on year, you throw away too much information. And when you look at that, the March price index is actually slightly lower than the January price index. So, of course, there are seasonal factors. So, if this is to continue, you'll have actually zero inflation. But, of course, this will not continue perhaps because what happened was there was already a drop in food prices because the imports are coming in. And also in many kinds of products, the price is too high that it has nowhere to go but down. So the question now is whether the rest of the inflation that was brought about by the shocks, which we call second-order effects, will also follow soon. And we're beginning to see signs of that as well on the month-on-month inflation. Most products now, if you just look at the inflation from one month to the next, most products are now consistent with, our target is 3 plus or minus 1. So month-on-month should be 3 divided by 12.
Okay. So
the current month-on-month is now consistent in except for a few products, now consistent with the 3% inflation next year.
Okay, next year. So are you basically saying you are looking to pause? Is that your move that you not just hope to be able to make, but think is likely, given everything you just said, that you're not watching these big year-over-year numbers so much. You're watching these monthly numbers that have come down. You've even had one that was negative. Are you aiming for the pause then in May?
Well, by the way, I have to add that what contributed to that is our high interest rates reversed the depreciation of the peso from a 13% depreciation year-on-year last year from January to October. And whereas the peso actually appreciated by 2.5% since January. So that's the other factor that's working. And therefore, if the numbers in April, because two birds don't make a spring, right? So maybe we need 3 birds, one more data point, which is April. If the April data points are consistent with the last 2 data points, maybe it's time to pause because we're not as worried now about the currency depreciating because it's actually has strengthened quite a bit.
So, Governor, does that mean if you get another negative print in April, that's not enough to make you comfortable with a pause? How negative does it have to be? And are you more worried about the strength of the demand side still?
Well, yeah, that's right. You know, of course, that GDP numbers were surprisingly high. So that means, for last year, so that means demand was also strong. But we think that the increase of 425 basis points has done enough already to eliminate the excess demand.
Of course, a lot of the outlook has been made murky about what we've seen in terms of some of these global banking crises. I'm curious as to how you feel about Philippine banks, and do you feel that they're well capitalized at this point?
Okay, I've often asked that question. Is the large rise in Philippine policy rate will create another Silicon Valley Bank in the Philippines? And the answer is no. We look at the bank balance sheets, they're very strong. And besides, our bond market has relatively short tenors. Now, we don't have 30 years, so the losses from the high interest rates, high policy rates is much smaller than in the United States, which is coming from zero, right? So in that sense, we are not, that high policy rates will cause financial instability is not a concern in the Philippines.
Well, that's a good news for the Philippines, Mr. Governor. I want to ask you a couple of questions, though, about rates. You know, you've hiked 425 basis points since May of last year. Do you think you're getting close to the peak? Are you getting to your terminal rate?
Well, as I said, if the April print is consistent with February and March, maybe we have peaked. But it's hard to speak too soon because it has happened before. It's like a basketball game. You celebrated too early, and the ball was stolen. So
we've seen a lot of those in U.S. March Madness. That's for sure. You know, it happens all over the world. So in terms of then, when you get to that pause, there's always this. All central banks are asked this question now. Do you pause and start looking to cut? Or do you pause, and is your message, no, we're going to keep the rate high for a considerable period of time?
For a pause, then it's one more observation point. But for a cut, maybe 5 more?
Pardon me, 5?
We have to be more confident that the low month-on-month is really now the central tendency.
Do you think that you're going to cut the reserve requirement by the end of June, as you've signaled in the past?
Yes, because the only reason we're not cutting the reserve requirement is we don't want to confuse the markets, which is, why are you cutting the reserve requirement when you're raising rates? But that confusion will be gone if we pause. Therefore, that gives us time to cut the reserve requirement.